The worst thing I think is opening an LLC and you can put all your expenses in there and it's $200 a year. That is setting up for an audit, 100% setting up for an audit. If you go to a tax preparer who guarantees a refund, make sure that there is not a Schedule C or a Schedule E that you don't know about that's on there, because what they're doing is basically saying you have your own business and they're writing off all these expenses. All that is setting you up for an audit in which you owe all of that money back.
Welcome to Make Yourself at Home. We've got Branden Chopelas with us today. Branden is a North Carolina-based certified public accountant and the entrepreneur who operates Chopelas Tax and Small Business. She offers services across North and South Carolina. Her company provides not only bookkeeping for large and small businesses, but also personal accounting and tax preparations. Branden is known for her strong tax code expertise, detailed reporting, and commitment to client education, as well as earning trust from all of her clientele. Thank you, Branden, for joining us today.
Well, thank you for the nice words. That was sweet. Thank you.
So one of the things that Make Yourself at Home is about is it's basically consumer focused. We're trying to get everybody together. There's lots of information for realtors. There's lots of information for accountants. In our industries, they all have this cloud of mystery that nobody really understands. They don't know what's happening. So we're trying to turn that on its head and give everybody a peek behind the curtain, because it really shouldn't be mysterious. So my questions are more focused in that direction. So with the day and age of TikTok and Facebook and Instagram and all of those wonderful things, they put out a bunch of garbage as well. So I want to try and get today to try and clear up some of those things. So what's the one question that people ask you over and over again that you really wish everybody knew?
There's a lot of them, actually, depending on the kind of things. I think specific to real estate, let's talk about that, is more people talk about, how am I going to pay for the capital gains when I sell my house? Number one. And the tax indications are, if you have lived in your primary home the last 2 of the 5 years, so it's 2025. So that means if you did it in 20 and 21 and you moved out and rented it for 23, 24, and 25, with some exceptions that we won't necessarily go into today, or let's just say you let your kid live in it and there was no rent or whatever. If you lived in it for the past 2 years, or you moved and you thought you'd move back, all the reasons, you can take up to, if you're single, $250,000. If you make less than $250,000 on the sale of your house, there's an exemption for taxes on that. If you're married and you're married jointly, it's $500,000. So generally in this day and age, you're not, unless you've owned your house since the early 80s or 90s, when, you're not going to be making that kind of money on your house in order to worry about that. The only thing is that you can only take this exemption every 2 years. So let's just use that prior example, 20 to 21, and then you moved into another house that you consider your primary, 22 and 23. And then you're like, hey, we're going to sell them both and we're going to move to the Caribbean. That's amazing. But you can only take the exception on one, not both. And there is always exceptions. That is the general rule. And the exceptions are very tight. So if you hear on social media, it's not tight, talk to a tax consultant. You want to make sure that your circumstances are such. And if you tax accountants shop around and each of them are giving you the answer and you're like, I like TikTok, it's going to cost you money in the long run. We're trying to keep you safe. We want to basically take advantage of the rules that we've been given to make your liability the least. We're not out here. We don't make any money if you have to pay more in taxes. Our job is to make sure that we keep you compliant with the tax law. So always make sure, if somebody's saying consult a tax professional, consult a tax professional. So if you have this ladder information, this latter example, talk to a tax professional. There may be a reason why you can sell them both and not have to pay any, but again, that's a super exception and not a rule. But other than that, there's no tax.
So that's one of the things that we still hear today is that, okay, I'm selling my house and I'm going to take my profit from selling my house and put it into the next one. So I don't have any tax liability on that. And that hasn't been around since like the 90s.
And it doesn't even matter because you're selling into a new property. There are business tax things that may apply for, but really, honestly, that doesn't exist. So even if you, it doesn't matter. No matter what money you make, even if you put it into another same thing, you're still going to owe money on the taxes. You owe money on your income. You go buy groceries with it just because then if you eat those groceries and go buy more groceries, that doesn't help. It doesn't matter. That's an individual event. So even whether you put all that money into your new house or whether you keep all that money and get a new mortgage for the new house, it doesn't matter. There's no taxable event.
So one of the other things that we've talked about when people are selling their home is not only when they sell their home, you look at it and say, okay, let's just say you made $100,000 when you sold your home, but you also put all of this money into it as well. So even if there is a taxable event when you sell your home for whatever reason, you still can also pull some of those items that you've paid into your home. Like you got a new HVAC, or that doesn't count either?
No, because that's considered maintenance. So basically when you sell your house and your HVAC goes out, your house has now devalued and you have to get it back up to the value it's at. Now, that being said, if you added on to the house, or if you bought the house in one condition, and let's say you budgeted it, you did it to the studs and you renovated it and you increased the value of the house. I've actually done that with a house. You know this. And increase the value of the house. That's a difference because you actually made it better from when you had it. HVAC, roof, windows are all considered maintenance items that you are maintaining that house to the condition in which you bought it, if that makes sense. But if you completely gut it, or if you add on to an extension, or you add on to an outbuilding, and to a certain extent, although you will attest the fact that it doesn't help, I mean, add on a pool, these things could potentially help with the expenses that you would add on to lessen that gain that you may have on the house.
Okay. Is there a tip or a trick that most people don't think about when it comes to their taxes that they really should?
A tip or trick? Not really. Just make sure that if you're getting a tax form, especially if you're working with a tax professional, I always tell my clients, I'd rather have way too much information. Some clients don't think they've given me, or they give me all 7 copies of their W-2. I love that. If you are talking to a tax professional and you get a notice of some sort from the IRS or the state, we need all the pages, even the pages that say this page is blank. We need all the pages because sometimes in the little print, there's something there that we need. But the tip or trick is just to try to, my preference is always, no matter what, whether you use an online program or whether you use a tax preparer, as soon as you sign that return, at least for me, I do it through DocuSign, but other people, I think like TurboTax and Tax Act, they do it too. Save a copy of that return in a place, either on a cloud drive or your hard drive, that you can easily access that in a PDF form. You may not think that you're going to move, but 6 months later you may. So make sure that you have all of your tax documents in the same place in the same time. Put it in the proverbial file cabinet in the back where you can forget about it, but you know where it is. That's the biggest thing for me, because we get recommended, like, can you please send me a copy of the tax return? I can't find it. Or I even get, I know I sent you my W-2s, but I don't know where they are. So, I mean, to me, it's a 5-minute process to make sure that you know where your tax documents are at all times, because you absolutely never know when you might need them.
Yeah. So, like, one of the things that we tell everybody is like when we close, we send out their closing documents come January 30th. I mail them all back to everybody else because it never seems to fail that you've moved and you have no idea where you put it. So I try to send them out at the end of January to everybody who closed with me the year prior. Because I want them to be able to take their closing document to you and go, okay, what can I write off? There's the misinformation out there that you can write off your moving expenses and you can write off the taxes that were on that. And as a real estate agent, from what I understand, and you've told me, there really isn't anything that you can write off when you buy a house or move, unless you're moving great distances. Is that right?
So moving expenses they took those away with the 2017 tax law. It used to be for generally your companies may reimburse you for moving expenses, and that's where you can recoup those expenses. But even before, it was you had to move 50 miles. It had to be for this or that or the other. Now, I believe there are some exceptions for those in the military. But for everybody else, there's no exceptions. To the closing documents, the taxes that are on your side of the column that you had to pay, they are deductible. So that is the thing. As a tax preparer, I like to see that closing document, especially if it's an investment property, because that's going to help us with the basis of it for depreciation purposes when, if it's a rental or if it's a commercial building that you're buying for your business. So we always like the close. And again, even if it's your personal home, if you send me the closing document, I just put it in with all your other stuff. If I don't use it, at least I have it.
Extra information never hurts.
Never hurts. I would never get upset if you sent me your W-2 10 times. I might make fun of you a little bit, but you would never say it.
Shoot, after you get used to sending the same thing to the lender over and over and over again, you're going to send it to your tax preparer as well.
And can we touch on lenders just a little bit? So people get upset at CPAs. I'm going to let you know the AICPA, which is the American Institute of CPAs, it is our biggest membership drive. They're the ones that basically politic for us and lobby for us and all the things. Our E&O insurance, which is errors and omissions insurance, our standard practice, there is something that lenders ask for, and we call it in our industry a comfort letter. And it's basically, especially for small business owners, I prepared their taxes. They want us to attest that everything in the tax return is correct, and that basically that we're saying that the tax return is 100% correct, and we can attest to that. We're not allowed to give those. And every single lender asks for them. And we fight back and we fight back. And most of the time, I get to a point because our lender, you as the person trying to get the loan, but they're not going to let us close. It is a box that they need to take off their checklist. Know that we are not allowed to attest to that, because in order for us to attest that is the truth, we would have to charge you probably no less than $5,000 to completely go through everything in your business to say and write an official audit. I don't even do audits. I have the license for it, but I'm not allowed to do that through the state because I told the state I wasn't. So with that being said, as a tax preparer, we are supposed to prepare taxes based on the information you give us. I'm allowed to ask questions if I don't understand something or I don't see something. But if you send me something and you say, hey, I made $100,000 this year and I had $75,000 worth of deductions, and this is the breakdown of these deductions, I go with that. I don't sit there and go, I need to receive the $100,000. I'm not required to do that. So these letters are basically asking us to say that $100,000 number is true, and we haven't done that. So I'm just letting you know, like, we're not trying to be ugly. We're just not allowed to do that. So most of the time, what I do say is I did prepare Joe Smith's return this year, and I've done it for the last 10 years based on the information that he has given me. And that's how we write the letter. But if you run into a tax professional that is fighting back on that, to me, that's the lender issue. That's not ours. They should take that off because we can't do that. We're not allowed.
That's one of the pieces of information that I'm looking for, is like, what piece of information is, or misinformation is out there that we can try and clear up today. So again, in the day and age of TikTok, because you and I have been not only clients for the last 14 years, because Branden has bought homes and sold homes with me, and she has been preparing my taxes for the last 14 years. She proved to me that TurboTax was not all that it was cracked up to be, and she actually went back and did 1 year for me. But with all of that, with all this information that's out there, what one piece of misinformation, not just one piece, but what piece of misinformation is out there that drives you absolutely bonkers?
So the tax code right now, for I would say 99% of the people, is pretty straightforward. What you can do, what you can't, things like that. When you see a TikTok, the IRS agents don't want you to know, your accountant doesn't want you to know. I want you to know everything. I want you to be well informed. But if you're saying they don't want you to know this and we're missing this deduction, go into that TikTok. If it's a CPA, potentially. I've seen CPAs give terrible advice on TikTok. If they're a tax CPA, just like doctors, just like attorneys, just like real estate agents, we all have our specialty. Tax is a specialty. You can be a CPA and not know a lick about tax except for what you had to do to pass the test. So make sure that you're talking to a tax CPA that understands the tax code and the tax laws. They are pretty straightforward for the majority of the people. So if they're saying, I think Deana, you talked about open an LLC and deduct all your expenses. You can open an LLC. That's relatively easy, especially in our state of North Carolina, but any state, the states allow you to do that. It has to be income producing. It has to have a business purpose. There has to be some sort of desire to make money on that business and to at least successfully do that after they give you a couple of years grace to do that. But if you're just opening it with no income and you have basic expenses, you're not only going to get flagged for the IRS, you're probably going to get audited. And if they think that you've been doing it in the past, they can go way back if they wanted to. They traditionally can only go back 3 years, but if they think you've been fraudulent longer, they can go back to the year you were born. It's not worth it. If you are paying a lot in taxes and you don't know why, make an appointment with a tax professional. Sit down, have them analyze it. Even if you decide you want to prepare your returns every year, they can go through and explain why. Tax brackets are as low as they've ever been. Capital gains is as low as they probably ever will be. If you're paying a lot in taxes, it's because you're making a lot of money, and that's okay. That really is. There are some things that maybe you're not looking at that a tax professional can help you. Are you maxing out your 401k? Are there other things you can do? But honestly, all of it is spending money to save money. And then you have to decide, do you want to, and a lot of 401k is great because it comes back to you. So you're not really expending money, but you're not being able to get access to it as opposed to paying taxes. And that's the deal. Sometimes you just have to pay the taxes, unfortunately.
So I can't hire my kids and pay them each week to make my income go down.
Sort of. You could, but here's the thing about hiring children, and I get this question a lot. If you are self-employed and you actually report your business on your personal tax return, which is what we call a Schedule C or self-employed person, you can hire your own kids and they can be exempt from Social Security and Medicare. It's all these great things, but it's so specific. However, the biggest thing is if you're going to hire your kids, you're going to hire your children because you couldn't find somebody else to do that job. You can't hire your kid to sort email for you at $20,000 a year because you would not pay somebody else to do that. You need to pay your child what you would pay somebody who walked off the street and was qualified to do that job, how much you would pay them. And sorting email is arguably a minimum wage job. And menial stuffing, I always say they can stuff envelopes because I hear the stuff envelopes a lot. First of all, nobody mails anything anymore, so that's ridiculous. But second of all, you're not paying somebody a lot of money to stuff envelopes, and there's only so many you can stuff. Through our continuing education and stuff, the thing that always seems to come up is the restaurant owners that have their kids sweep the floors or stock. And all of that makes sense. So yes, if you're having your kids sweep the floor, then you would still, whatever you would pay somebody to do that at the end of the shift, make sure they keep their hours to keep you safe. Make sure that you're doing everything. But if you are going to hire your child to do something and they are, I would say 11, 12 is when maybe if you have an office job and you think you can help, that would be. Anything under 12 is really a question of what are you hiring them for and are they doing that job? Because the IRS isn't stupid. This is as old as time as people trying to avoid doing that by diverting it. That's why they had the kiddie tax laws put into place so long ago, because people were trying to divert it to their children. So again, I hate to say this, talk to a tax professional, spend the money and talk to 2 or 3 and get different opinions if you think so, because it'll save you that money in the long run if you think that you're going to do something. The one exception I will say is there's a lot of content creators out there now. And a lot of the content creators are including their children as part of the content, not as a look how cute my baby is, now let me go show you how to build a house. But, oh my gosh, I'm an overtired mom. Look at what my day looks like. There can't be an overtired mom without the kids, and the kids are part of the thing. I'm not asking for any sort of judgment on whether that's good or bad or ugly. But what I'm saying is those kids are now part of your income. And without them, you couldn't make that income, or it would be less, or people wouldn't watch your content. So in that regards, I think that is an appropriate situation in which you might want to pay your children. And then again, talk to a tax professional about what that looks like. How much would you pay my kids to pretend to be your kids, type of thing. And that's where you go. That's the bellwether with hiring kids. You can do it, but it's very tricky, and it's more of an exception than a rule.
I know that I have somebody in my life who does this, but everybody thinks I need to know, or I need to hire the tax professional who's for the rich people who have all the loopholes. How do we, oh God, who ran for, Mitt Romney ran for president, and they put his taxes out, and he really should have paid $16 million in taxes and he only paid 13. It was like, how do they get away with it versus what we have to get away with? Everybody thinks that there's a different tax law for the rich people versus us. And is the tax code the same across the board? How do we get those benefits so we can keep our money as well?
Sure. So no, the tax law code is the same. The brackets are the same. The brackets, like if you are a let's just talk about a couple of different things. Let's say you are a W-2 income where you go to a job, they give you a paycheck every 2 weeks, and you make $1 million a year. You're going to pay a lot in taxes. But let's say that you have a job and you make $400,000 a year as a W-2, but you also have rental properties, and each of those rental properties affords you, say, $100,000 a year, and your investments come back and you have capital gains that make up the other $200,000, right? So that so the $1 million, and I'm making up tax brackets. Please, people, I do not memorize them. They change every year. But the top tax bracket is around 37% now. But let's just say 40, because it's a nice, pretty number, right? So they're going to pay $400,000 in taxes on top of Social Security, which is it's capped at 167, and then Medicare, which is another 2% on the whole amount, or roughly. So you're going to pay probably $400, $450 in taxes when it's all said and done on that. And that's not counting your state. At the other thing, the 400,000, your tax bracket at 400,000 might be cumulatively 25%, right? So that's 100,000 that you're going to owe. Your rental in that, and then you have to pay another 10% roughly on Social Security and Medicare. Well, not quite, but let's just say you owe 100, let's say 100 and $15,000 when you incorporate the Medicare and Social Security, which is low, but we're just going to call it that. Then your rental properties of $400,000, that's passive income. So that's just at the one level. So we bumped, so you're at the 30% there. So that you don't have to pay Social Security and Medicare on. And then the capital gains is at 20%, which is much lower than your other brackets. So that's how the rich are doing it. They're not taking like Bezos and Musk and all of them. Their worth is in their stock. So when they sell their stock, they're selling it at capital gains, which is capped right now at 20%. Remember that $1 million W-2 was at 40. That's how they're not paying the taxes, is because their W-2 may be 100 or 200,000, and they're getting the rest of that 800,000 and probably more than that in capital gains, which is capped. So diversifying your portfolio is the number one goal. Make sure you have some passive income. Make sure you have some investment income. Make sure you have, if you need W-2 income, we always need some sort of employment income, but diversifying. So as you grow your portfolio, when you first start out, you're just trying to eat. But as you get older and you're looking at these things, do I want to go into investments? Do I want to put my post-tax dollars in investments and then just build up my portfolio on top of my 401k? So I can have I can get all this stuff in capital gains. Dividends, if they're over a year old, is at that lower capital gain rate. Passive income, and that's where a lot of the really rich people actually make their money. It's not in W-2s. Their W-2s aren't very high. And if they are, they're not, I try to restructure if they can with their company. Sometimes they can't. But I try to say, especially if it's a closely held company, let's try to do that. And you'll notice some of the big corporations, you may work for Microsoft, you may work for Google. A lot of their packaging is in compensation of stock.
One of the things that we've started seeing is when people are buying rental properties or properties to flip.
Right.
In the real estate game, we call it an alligator. We're looking for something to eat up the profit that you have, so you're paying less taxes on it. That's the only trick that we know of.
Right. And to be fair, if you take a capital loss to eat some of your capital gain, you lost money. And you lost more money than you would have had to pay taxes on. So it's not, at the end of the day, especially with capital gains right now, just pay the taxes. They're not going to be any lower. Just not. I just can't see where capital gains is going to be much lower than it is now. It's lower than it's been in my 20 plus years of this business. For a good portion of people, it's 0%. So, I mean, to hit that 20, you have to be in a high tax bracket to start off with. So I think really start right now with the taxes being, so the tax brackets being the way they are, really work on diversifying and earning money that way.
As people, because it's December, everybody's running around, they're not thinking about taxes yet, but it's what, 6 weeks around the corner that people are going to start thinking about it. What could someone do today to get them prepared for 6 weeks from now, or to start getting ready for the taxes?
So if you normally year after year don't owe taxes, or you owe very little, to me, if you're $1,000 swing either way, depending on your income, if you only make $15,000 and you owe $1,000, that's, I don't even think possible. But if you're in like the 100 to 200 range, which most people are, and you have $1,000 swing, good or bad, I feel like you've hit the nail on the head, and keep going the course. But if you've always owed in the past and you're trying to figure out, and it's a little late in the year, but let's reevaluate before next year. Say, you know what? They're still not taking enough out of my taxes. I still think I'm going to owe, looking at what they've taken out this year to last year. Re-up your W-4. The new W-4s are coming out, and that is the form that when you get hired, you have to fill out, and it says, I'm doing single, married, filing jointly. I have this many dependents. There's no such thing as exempt anymore, and there's no such thing as zero deductions. They don't do that, although that is old school thought because they just changed the form a few years ago. So people are still saying that. But then make sure that your W-4 is up to date. read all the questions. The number one thing I get when people under withhold is that the wife and the husband are both working, and they both put married filing jointly, but there's a box, and it may change with the new form. I'll be honest with you, I've not seen it yet. I've just heard about it, but I think it's similar. And it's 2C, and it's a box that says we have more than one income in this household. Because if you don't check that box, and let's say you both make $75,000, then the IRS is withholding, thinking your whole family of four is only living on 75,000, not the 150, and they're not withholding enough. So if you check that 2C box, then it's going to be, oh, they make 150,000, because they basically rough it on, oh, we're doubling the income, thinking both spouses are basically making the same. If it's lopsided for where one spouse is making a lot more than the other, that may not be your best bet. But at that point in time, talk to a tax professional, pay the hourly rate for the consult for them to help you calculate what that should look like.
What was the worst thing that you have heard in social media here recently?
Oh, Lord. Are you kidding me? I can't even think. I try to avoid it. I really don't listen to them anymore unless somebody sends them to me and goes, can you tell me this is real? The worst thing I think is opening an LLC and you can put all your expenses in there and it's $200 a year. That is setting up for an audit. 100% setting up for an audit. One of the things that I see a lot on, like, even in social media, like on Reddit, a couple of things that you need to understand about your taxes. You are 100% responsible for them. Your preparer is not responsible for them. If you gave your preparer, you do not sign it without looking at it. And if you do, that's on you. If there's something informationally wrong on it, because of one, either the CPA made a mistake or the taxpayer made a mistake, which we do, we can hit a wrong button. We review, we try to do everything we can, but sometimes things slip through. Also, if you go to a tax preparer who guarantees a refund, make sure that there is not a Schedule C or a Schedule E that you don't know about that's on there, because what they're doing is basically saying you have your own business and they're writing off all these expenses. All that is setting you up for an audit in which you owe all of that money back. And they're like, I didn't realize they did that. So if you're going to somebody and you get a large refund you were not expecting, ask your tax preparer to explain it. Make sure there's no Schedule C. If you don't have your own business, there shouldn't be one. And make sure there's no Schedule E. If you don't have a rental property, you shouldn't have one. Or if you don't have interest in a partnership or an S corp, you should not have those forms. If you have those forms, pay the tax preparer because they did the work. It doesn't matter whether you use it or not, and do it yourself or pay another tax preparer. I promise you, whatever fee that was worth it in the end. And if you want to roll the dice. But when the IRS catches up to you, don't cry, because the penalties are going to be bad.
We will have all of your social links, your social media links attached to our podcast. We're going to put it also in our comments in case anybody wants to get a hold of you and hire you for your services. Branden, thank you so much for coming on Make Yourself at Home. We greatly appreciate it. This was neat, trying to learn something new.
I don't know what you did, because I've been preaching this to you for 14 years, but the other thing just to throw out there is, even though I'm a licensed in North Carolina, as long as I stay and work in North Carolina, I am eligible to work in any state in the United States on their tax returns. I can't work in South Carolina and call myself a CPA, but I can work physically in North Carolina and do any tax return.
That's one, Aaron, because you're one of the, it's not only are you my accountant, you're also my best friend. And it's really neat to be able to go, hey, I just found this TikTok. Can you tell me if it's true or not?
I want the audience to know that I about basically cuss her out every single time she sends.
We need to do this. I want to do this. Will make me more money.
No, the TikToks are so bad. And it's just a way, especially when they ask you to buy their book so you learn. They're just making business for themselves. I hope they're putting them on their tax return.
But yes, that not only do I do it, I know that I'm not the only one who does it. We know of somebody particular in my life who, again, was wanting to find those rich people loopholes. Yeah.
And they're just out there. It's not like, there are some tactics and things for high net worth individuals that, that they're trying to structure with their attorney. And that's another thing I need to, before we close. So a lot of times when people are talking to me, I'm like, that's a financial planner question. And that's an attorney question. Because we're licensed, we're not allowed to answer financial planning questions, and we're not allowed to answer attorney questions, and they're not allowed to ask us. So if you have a complicated situation, I would encourage you to set up an appointment where you put all three on the same call, or at least I talk to financial planners weekly, especially this time of year where we're trying to plan, because they can do this portion, I can do this portion, and we work together. But just understand, when we're trying to punt or say things, it's not because we're trying to avoid the answers that we're legally not allowed to give it. And so we're trying to, but it can take, and it does sound scary to have a financial planner, an attorney, and a CPA. It sounds, oh my gosh, that's a lot. It really isn't. And even the consults are worth your time, especially if you're talking about thousands and thousands of dollars. To pay, say, $1,000 for an hour consult with the three of them is 100% worth it, just to make sure that you're safe.
Oh, we say it all the time. I'm not an attorney and I don't play one on TV, so you need to make sure that you're talking to one.
Right. They're the ones that keep you safe legally.
Exactly. The last thing you want is to paint yourself into a corner that you had no idea because you didn't ask.
If you own a small business of any sort that makes any sort of money, it is imperative, in my opinion, that you have a CPA or a tax preparer, somebody who's looking out for you. And I say this all the time. People, I think when they own their business, they feel like they're a failure if they don't understand their books or they don't understand their taxes. And I always say, I can't do your job. I feel like I'm a fairly intelligent person, but I can't do your job. I don't have the knowledge, the experience. So why in the world are you beating yourself up for not being able to do mine? Work that partnership, work it together to make sure that you're doing everything correct, and that they'll probably be able to give you suggestions on what you can do in the future to help mitigate your tax liability. And that's what they're there for.
Even if they tell you all the time, you surround yourself with intelligent people, because everybody's going to have intelligence in things that you do not. When we first started working together, one of the things that I said was, keep me out of jail because I won't go alone. You will come with me. But I don't understand my books, but you and I talk enough often enough that I'm making sure that I do have a grasp of what's going on in our business and what do we need to do. And we're always trying to learn. And just because I have a small business, you have a small business, doesn't necessarily mean everybody should. You work for somebody else, you may not need a tax preparer. My sons, your daughters, do not need a tax preparer right now because they're living at home. Yours have now flown the nest. They're living at home. They're making their own money. They don't necessarily need an accountant or a bookkeeper. But as you get older and you buy a home and you have deductions, like that's when you go from doing the easy form to actually, what's it called? Itemize everything.
1040, and that's a good point, Dee. Not everybody needs a tax preparer. The online is really good. The TurboTax, for people who just have W-2s and maybe a little interest or dividends, and they can plug in all their stuff, that is perfect for a lot of people. And there's no reason for you to go to the CPA unless, of course, you don't like to do it. I don't like to clean my house, so I don't. It doesn't mean that I can't. It's just that I hire somebody to do it for me. So you can hire somebody to do that for you. If you are not getting as much money, or if your refunds have drastically changed, or heaven forbid, you owe a lot of money in 1 year, it may be worth it to hire a CPA for 1 year, or a tax preparer for 1 year, write your ship, and go back to TurboTax. We don't get offended with that. Just do what you've got to do. At least I don't get offended. I can't speak for every CPA out there or tax preparer. And there's three different kinds. There's a tax preparer, and that's somebody who just prepares taxes. They're not certified. It doesn't mean that they're bad. It doesn't mean that they're not qualified. It just means they don't have the certifications. But they can't represent you at the IRS, and they can't talk to the IRS on your behalf or the state. There's a CPA, that's what I am, and that's just a certified public accountant, and we have lots of different fields. I chose tax. There's also something called an EA, which is an enrolled agent, and that is an extremely hard test that these EAs take through the IRS to be able to be a tax preparer and represent their clients with the IRS. An EA is basically a CPA without all the other accounting stuff. And so if you get an EA, they are just as qualified, sometimes more qualified than, say, a newbie tax person, or they may have specializations in tax that I don't, and they may be. So the EA and the CPA are the ones that can help you with the IRS. That does not mean that if you go to a tax preparer who does not have the credentials, that your tax return is wrong. It just means that if it is wrong, you're going to they can help you, but they can't speak on the IRS to the IRS on your behalf.
And that's how I got started with you. Is I used TurboTax most of my life until about 2012, and that's when I ended up owing money. And you were like, let me take a look. Not only were you able to get me all of that, you redid that tax return and did it in an appropriate manner for me as a small business, but you've also guided me in that aspect of becoming an LLC, when I became an S Corp, trying to get all of these things together. And then of course now you do all of my bookkeeping to try and keep everything straight. And God bless you for that, because Lord knows, yeah, keeping me straight's fun.
It's not terrible at all. But yeah, I think, and also you need to be able to judge, just like a real estate agent, just like an attorney, just like a doctor, you need to be able to jive with that person. If you meet with me and you're like, I don't think that's the person, okay, go find your person. Don't try to fit that square peg into a round hole. You're going to make it, if they're saying stuff you don't like because you want more tax things, and you talk to 5 people in the same thing, then you might be the problem at that point. But most of the time, all we're trying to do is help. And my way of doing things may not be up to your standards, or you may want something different. You may want an instantaneous return. You're never going to sit in front of me while I prepare your return. It will never happen. But I know that there's a lot of tax preparers that do that. So you need to be comfortable with what you're comfortable with. And if you're willing to change, then you need to be willing to use those growing pains. But I will say, as a tax preparer, and all the tax preparers I know, especially CPAs and EAs, we generally care about getting it right. But we're not infallible. So we do what we can to get it the best.
I try to tell every client, whether they're real estate or just anybody that you meet, when you're hiring someone, you are building a team. You're the boss. Now, while you may not have the knowledge, you are still the boss. And what you're looking to do is you're looking to hire somebody who's going to make you better. So you have to find someone that you gel with. I tell everybody, I may not be your cup of tea, but that's okay. I'm champagne.
Right.
That's right. There's enough real estate agents in the Charlotte metro region. Spit and you'll hit one. So I don't know if CPAs are just as bad as we are.
We are dying out.
Oh, wow. So you're getting ancient.
So when you talk to a CPA and they're like, it's taken weeks and weeks. Yep. Because we're dying and retiring faster than we're bringing professionals in. And so our industry is tighter and tighter, which means our fees will be higher, which means it'll be longer before we get our stuff done. It doesn't mean that we don't want to get it done. It just means that you're going to probably need more patience, to be fair. And the trends are showing that it's dropping at 4% a year. It's a crisis, and we don't really know how to solve it. If you can get an accounting degree and go be a finance pro, then that's definitely more lucrative, to be fair. And that's, I think, where we're losing a lot of them. Mm-hmm.
Again, thank you so much for being part of this. Like I said, we'll have all of your contacts in the comments and also attached to this podcast. If anybody needs, this is Branden Chopelas with Chopelas Tax and Small Business. Thank you so much for joining us today.
It was a lot of fun.
Thanks for joining me on Make Yourself at Home. I hope you found insights and inspiration to help you navigate your real estate journey with confidence. Don't forget to follow, subscribe, and share this show with your friends because everyone deserves to feel at home. Until next time, stay informed, stay empowered, and keep making moves that matter.